Markets across the Asia-Pacific region surged on Monday, riding the wave of optimism from Wall Street's strong performance last Friday. But here's where it gets controversial. All eyes are now fixed on China's upcoming decision regarding its loan prime rate, a move that could significantly influence global financial markets. In Tokyo, the bustling Akihabara district was alive with pedestrians and shoppers on July 27, 2023, as Japan prepared for a crucial monetary policy meeting scheduled for July 27th and 28th. This comes on the heels of Japan's core consumer price index climbing by 3.3% in June, a figure that has outpaced the United States inflation rate for the first time in 8 years. This unexpected surge in inflation raises questions about the Bank of Japan's next steps and whether it will adjust its policies to address rising prices. Meanwhile, investors are closely watching China, where the central bank is widely expected to maintain its current loan prime rates, according to a Reuters survey. This decision follows the U.S. Federal Reserve's recent 25 basis point rate cut, which has already set the tone for markets worldwide. The choice to hold rates steady in China despite the Fed's easing sparks debate. Is China prioritizing economic stability over growth? Or is it signaling caution amid uncertain global conditions? In terms of market movements, Japan's Nikkei 225 index opened 0.74% higher, while the broader Topix index gained 0.58%. South Korea's Kospi index also showed strength, climbing 0.71% in early trading, with the smaller Kosdaq index up by 0.7%. Australia's ASX P200 index rose by 0.49%, reflecting a generally positive mood across the region. Hong Kong's Hang Seng Index, however, was poised to open flat, with futures trading slightly below the previous close of 26,545.1, indicating some caution among investors there. Across the Pacific, U.S. equity futures remained relatively steady during early Asian trading hours, following a week where major U.S. indices hit new all-time highs. The Dow Jones Industrial Average and the S&P 500 both closed at record levels last Friday. Buoyed by the Federal Reserve's rate cut, which has encouraged investors to anticipate further easing. According to the CME FedWatch tool, markets are currently pricing in the possibility of 2 additional quarter-point rate cuts before the end of the year. This expectation underscores a growing belief that the Fed will continue to support economic growth amid ongoing uncertainties. To recap last Friday's performance, the Dow Jones Industrial Average rose by 172.85 points, or 0.37%, closing at a fresh record of 46,315.27. The S&P 500 increased by 0.49% to finish at 6,664.36, while the Nasdaq Composite gained 0.72%, ending the day at 22,631.48. This complex interplay of inflation data, central bank decisions, and market reactions raises important questions. Will China's decision to hold rates steady prove wise? Or could it stifle growth? Is Japan's rising inflation a sign of a shifting economic landscape, or a temporary blip? And with the Fed signaling more cuts, how will global markets adjust? We'd love to hear your thoughts. Do you agree with the current market optimism, or are you cautious about what lies ahead? Share your perspective in the comments below and join the conversation.